Welcome everyone to Vested Interest. This is Shane, and just like the title says, today guys I wanted to cover 3 consumer discretionary stocks that you may want to consider to buy now. I did a video recently of the different stock market sectors, and one of the things I noticed whenever I was doing that video is that I'm pretty light in the consumer discretionary sector. So I have been looking, and I had some stocks on my watch list. Today we will look at Whirlpool, Foot Locker, and Best Buy. These are some stocks that I see value in right now. They are definitely cheaper than the market currently. Consumer discretionary is a sector of the market that typically pulls back or has a drop in price, so to speak, whenever market conditions kind of take a turn or when we're in recession. People obviously aren't going to go out and start looking for things that they don't necessarily need. If you have a washer, dryer, refrigerator, stuff like that are discretionary expenses. If your washer breaks, you may go out and buy a new one, but you're not going out to buy one every day or every week or even every year, right? Best Buy, same thing. Foot Locker, obviously sells footwear and clothing apparel, workout apparel. Whirlpool is a manufacturer of washer, dryers, refrigerators, that sort of thing. And then, like I said, Best Buy is a big retail store in the consumer discretionary sector. They sell stuff like washers and dryers, TVs, laptops, computers. They also have some other services that they offer. So if you're looking for some stocks in the consumer discretionary, here are 3 that you may consider. And without wasting any more of your time, let's get right into the video. As you can see, first up, Whirlpool Corporation, ticker WHR. The close of business today was $209.75. It is down $7.27. It's a 3.35% decline. Like I said, these 3 stocks, all of them are going to be companies that I feel are starting to get fairly valued or even below market value and offer some good returns potentially in the future. Again, if you see here this why I did pull this information from Yahoo Finance. So if you are interested in any of these companies we talk about today, you should do your own research, maybe check out some other sources, do your own estimates on what the value of the company is, and go from there. For our purposes, let's look at some of the metrics here from Yahoo Finance. The 52-week range, it has been as low as $180.44. It's been as high as $257.68. Currently at $209.75. It is closer to that 52-week low. But again, this one may be one you want to put on your watch list. If this does continue to fall, could hit that $180.44 low. Obviously, that would be a better buy point than $209.75. We never know what stocks are going to do from day to day, week to week. But you can also see here over about the last month, it has fallen down, maybe come up a little bit over the last couple of weeks, but over the last month or so, it has come down. We'll also look at the PE ratio here, extremely low at 6.69%. I think the current market is somewhere in the high, overall stock market anyway, is somewhere in the high 20s, low 30s, depending on what day of the week you look at. Maybe in the high 20s now that it's dropped down a little bit over the last couple of weeks, a little pullback. Obviously, this is a dividend paying stock. That's what we look for here on this channel. The idea is to one day live off the dividends. This particular stock pays $5.60 per year per share. Divide that by 4 and that would tell you what the next payout would be. And here they're giving you a 1-year estimate for the price per share of $255.67. So they definitely see some upside from the current $209.75. So not only would you get the dividend while you waited, but eventually if it hit this 1-year estimated target, you would also get that $40 or so, $45 of appreciation per share price. Next up, take a look at Best Buy, ticker BBY, currently $98.64 as of the close of business, down $1.40, so down 1.4%. Don't see that very often where they line up like that, but down 1.4% also equals $1.40. 52-week range, and the low was $94.54, a high of $141.97. So again, at $98.64, much closer to that 52-week low. Starting to see a pattern here. Extremely low PE ratio, 9.54%. And forward dividend is $2.80. Divide that by 4. That would give you your payout. And again, don't see that very often, but $2.80 per year per share, also 2.8% dividend yield. And this dividend yield is a little bit higher than the last one. 2.8% is a real nice dividend yield. Anything over 2%, in my opinion, is very nice. And again, if you look at their 1-year target estimate, they do see upside in this stock, $126.14. If it hit that, you'd get the $28 share price appreciation plus the dividend while you waited. That's what I love about dividend stocks. Whether the stock market's up, down, sideways, I get the dividend return per share. Plus, I try to find undervalued stocks like this one, in my opinion, and buy them undervalued, so I also get that appreciation as it runs back up to $126 or even $141 where it was at one point in the last year. Last one we're going to cover today, guys, is Foot Locker, ticker FL, $43.21 as of the close of business. That's down 0.17 for the day, down 17 cents for the day, down 0.39%. Again, 52-week range here, 39.76 low, 66.71 high, and at 43.21, much closer to that 52-week low than we are the $66.71 high. Another extremely low PE, 4.96%, pays a dividend of $1.20 per share per year, and that is a 2.77% dividend yield. And again, their 1-year estimated target price, $62.52 per share, says that they also expect some share price appreciation here. And those are the 3 that we wanted to cover today, or I wanted to cover today, guys, and show you, in my opinion, in this particular sector, these are 3 stocks that I feel are fairly valued or even undervalued currently in this overvalued market. If you are looking to add some consumer discretionary stocks, these may be 3 you want to take a look at or add to your watch list. And again, you can see here, all of them have pulled back recently. This maybe has, in the last week or so, come up a little bit. But these pullbacks are what you're looking for, right? If you can buy these stocks here at these low points, you'll get this appreciation as they come up. Obviously, these are cyclical, what they would call cyclical stocks. Consumer discretionary, again, it's not something you have to buy every day. It is at your discretion. So most of the time, that's when people have extra cash or absolutely need to buy. So some people would steer away from this sector in economic turmoil, times of recession and stuff like that. But for me, that's when I look for value, guys. When stocks are on sale, that's whenever you want to pounce. Like Buffett says, when others are greedy, be fearful, and when others are fearful, be greedy. So again, if we're headed into a recession, people start worrying about those consumer discretionary stocks. They get hit pretty hard. People run away from consumer discretionary because they're afraid people aren't going to spend money on it. And that's the time, in my opinion, when you should jump in when those prices are low and then ride them back up, get that price appreciation plus those dividends. That's at least what I like to do. And as always, I appreciate you stopping by. And if you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring that notification bell, and subscribe to the channel. Drop a comment below and let me know what you think of these 3 consumer discretionary stocks. I do personally read and respond to all the comments, and I'm always interested to read your questions and or opinions. Hey, and hit that thumbs down button too, guys, if you didn't like the video, don't like these stocks, don't like the consumer discretionary. Let me know that too. Always interested in reading your comments. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. We'll see you next time.